According to BBC News, since Russia's invasion of Ukraine in February 2022, the US, UK, and EU, along with countries including Australia, Canada, and Japan, have imposed more than 16,500 sanctions on Russia. Before we continue, make sure to subscribe to our channel for detailed analyses on the global economy. Now, let's talk more about the impacts of these sanctions. One of the most dramatic impacts was the freezing of Russia's foreign reserves. Over $600 billion, which Russia had saved up to cushion its economy, was suddenly out of reach. Russia thought it had a plan by stockpiling foreign currencies, but the West froze these assets, crippling their financial strategy. The sanctions also disrupted Russia's banking sector. Major financial institutions, such as Visa, MasterCard, and American Express, suspended their operations in Russia. This move made it difficult for Russians to use their cards abroad, adding another layer of economic isolation. Sanctions have not only isolated Russia financially, but have also hit its industries hard. Foreign companies like McDonald's, IKEA, and Nike have pulled out, causing a significant dent in the economy. The withdrawal of these companies resulted in an estimated $200 billion loss for the Russian economy. The energy sector, Russia's economic backbone, has been a primary target. European nations have started to reduce their dependence on Russian oil and gas, aiming to phase out imports entirely. A full Western embargo on Russian energy could shrink the Russian economy by an estimate of more than 20%. To truly grasp the current state of Russia's economy, let's talk a bit about the key economic indicators. Inflation, interest rates, and the ruble's value paint a clear picture of the challenges Russia faces. First, inflation has been a major issue. After the invasion of Ukraine, inflation in Russia soared. In March 2022, it reached a staggering 16.7%, compared to 8.5% in the US at that time. This surge was driven by a combination of supply chain disruptions and the sanctions' impact on prices. Interest rates also saw dramatic changes. To combat the rapid rise in inflation and stabilize the economy, the Russian central bank increased the interest rate to 20% shortly after the invasion. This was a drastic measure to curb inflation and prevent the ruble from losing more value. Speaking of the ruble, its value has been highly volatile. Before the invasion, $1 US was worth about 75 rubles. By March 2022, the ruble had plummeted to around 130 rubles per dollar. Although the currency later stabilized somewhat, it still shows significant weakness. The ruble's volatility is a direct reflection of the economic turmoil and the impact of international sanctions. The stock market has also faced unprecedented challenges. Following the invasion, the Moscow exchange was closed for several weeks to prevent a massive sell-off. It only reopened in late March 2022, but with significant restrictions to prevent a complete market collapse. The closure was an attempt to protect the market from further instability, but it underscored the deep economic uncertainty. Lastly, foreign investment in Russia has dried up. Many multinational companies have exited the Russian market, leading to a significant decline in foreign direct investment. The exodus of foreign firms has not only resulted in job losses, but also a reduction in technological and capital inflows, crucial for economic growth. These indicators collectively show the strain on Russia's economy, illustrating a landscape marked by high inflation, soaring interest rates, a volatile currency, and a struggling stock market. And apart from hyperinflation, unemployment is amongst two of the most immediate and severe consequences Russia would face if its economy collapses. Let's break down what this would mean for everyday Russians. We've talked about inflation as a result of sanctions, but unemployment would also surge dramatically. The sanctions and withdrawal of foreign companies have already led to significant job losses. The New York Times reported that the exit of major brands like McDonald's and IKEA resulted in over 9% unemployment. In the event of a collapse, this figure could rise sharply as more businesses shut down and foreign investments dry up. The job market would be particularly harsh on those in sectors heavily dependent on international trade and investment. Industries that rely on foreign capital and technology would face massive layoffs, further driving up the unemployment rate. This would create a ripple effect across the economy, leading to increased poverty and social instability. The combination of hyperinflation and high unemployment would devastate the living standards of Russian citizens. With incomes devalued and jobs scarce, many would struggle to meet basic needs. The economic hardship could push millions into poverty, reversing years of economic progress. When an economy collapses, social unrest is often not far behind. And Russia is no exception. If the economy were to collapse, the resulting social unrest could be both widespread and intense. Historically, economic turmoil in Russia has led to significant political changes. The collapse of the Soviet Union in 1991 is a prime example, where severe economic difficulties resulted in social upheaval and the eventual dissolution of the state. The economic hardships faced by citizens can quickly turn into mass protests and demands for political change. In the event of a collapse, widespread unemployment and hyperinflation would likely lead to public discontent. With basic goods becoming unaffordable and jobs scarce, many Russians would face severe hardships. This economic strain could spark protests and civil disobedience. The government's response to such unrest could further exacerbate the situation. Russia has a history of cracking down on dissent, and heavy-handed measures could lead to more resistance. Authoritarian responses to protests can often lead to a cycle of violence and further unrest, rather than calming the dissent. Moreover, the loss of trust in the government could be profound. As citizens face growing economic hardships, their faith in the government's ability to manage the crisis would likely diminish. Economic collapse can severely undermine the legitimacy of the ruling government, leading to political instability. The potential for regional unrest is also significant. Different regions in Russia have varying levels of economic development, and a collapse could further worsen these disparities, leading to regional tensions. As history shows, such conditions often lead to widespread protests and demands for change, posing a serious challenge to the stability of the nation. One of the most immediate and severe global impacts of a collapse in Russia's economy would be disruptions in the energy market. As one of the world's largest exporters of oil and gas, Russia plays a crucial role in global energy supply. A collapse would send shockwaves through this sector. Russia's energy exports are vital to many countries, particularly in Europe. Back in 2022, Europe relies heavily on Russian energy, with countries like Germany importing a significant portion of their gas from Russia. European Union's largest economy, Germany, is Russia's leading customer, paying Russia's state-owned gas company $200 million. If Russia's economy collapses, its ability to maintain these exports would be severely compromised, leading to shortages and increased prices. The disruption wouldn't just affect Europe. The global energy market is interconnected, and any significant disturbance in supply from a major producer like Russia would have worldwide implications. In response to these potential shortages, countries might scramble to find alternative energy sources. This rush could lead to a bidding war, driving prices even higher. The sudden need for alternative suppliers would push global energy prices to unprecedented levels, affecting economies worldwide. Such disruptions would also accelerate the transition to renewable energy sources. While this shift is generally positive in the long term, the short-term effects could be chaotic. The immediate push towards renewable energy, while necessary, would likely